Ladies and gentlemen, we have the Robinhood earnings. Okay. Call is in 30 minutes and the numbers are out right now. My spreadsheets are up. Let's do this. Holy freaking crap. So, unbelievable earnings. Here, let me go to the top and we'll just work our way all the way down. Let me share my screen here. So, first off, okay, in Robinhood earnings, we can go through the press release and this as well. Funded customers is finally starting to see a little bit of a breakout here. Over 500,000 ads is a massive increase for Robinhood. For the longest time, probably 2.5 years, they were lucky to do anything over 100,000. 500,000 quarter over quarter, absolutely stunning. Okay. Gold subscribers also seeing a massive percent increase in their total amount. So total attraction rate or attach rate 7%. Unbelievable. And that's probably going to continue upward if we see what's it called? The credit card come out with massive success. That'll be very exciting. But look at this freaking net deposits. Unbelievable. 44% growth. We're going to essentially look through every metric, and what we're going to see is essentially breakout numbers, or essentially every number that I can find is pretty freaking exciting. Okay. Revenue seeing massive increases, breaking out of this 400 mark and going all the way to $618 million. Okay. While also not seeing nearly as high of operating expenses. And the ones that they did adjust for, I was very excited. Okay, so one of the things that they did increase was sales and marketing. They said they were going to do that. I was very, very excited that they said that they were going to start ramping up back into growth, because that's where you get to see the beautiful Robinhood. You don't really see Robinhood at its finest whenever they're trying to tighten the belt. Now, net income also raised to 157 million, okay? Up from 30 million just a quarter ago. Adjusted EBITDA raising up to a margin of 40 cents. By the way, the earnings per share, 18 cents. I don't know if you can see that there. We can also, once we just go through all these slides, I'll flip over to my spreadsheet, which I just prefer looking at. But yeah, absolutely stunning. Funded accounts grew, and they even break it down here. Where is it? So here's funded accounts and how they break it down. So it's their beginning funded accounts, where they started at, their new customers, so people that they're just actually going for and getting, and those are the people that they're paying for. Resurrected accounts are very exciting because these are customers that they sort of written off. They've taken the money out of their account. They're not using the service anymore, whatever. Getting those customers back, very exciting. And then even on churn, you've seen a lot of churn that's above this 200,000 mark. And then now we're at 200,000 again, but like in the last 2 quarters, 300,000. So we're not churning as much. We're also, resurrecting a bunch and also adding a ton of new accounts. So all in all, funded accounts, massive add. Okay. Assets under custody, same thing. Massive new net deposits. And also the market gains, incredible. Okay. $15.8 billion. So, or sorry. Yeah. Sorry. Now let's go over to crypto. Okay, so let's go to transaction revenue, because they break their revenue really into 3 segments, but it's actually 2. It's this other category, transactional, and then net revenue or net interest revenue. So transactional, you'll see here, one of these things does not look like the other. Look at this freaking dark green. This is crypto. Okay, so their crypto is looking very much like Coinbase in a way this quarter. Just an absolute breakout. So in the last 2 quarters, we saw 23 million to 43 million, which was a great boost. However, whenever I was talking with Roy after the fact, I was like, well, you know what? Versus the volumes that we've seen in crypto, it's not necessarily representative of how much I thought we were actually going to get. Whereas this was a tripling. Okay, essentially 193% gain quarter over quarter. That's an unbelievable ad. And it's really where we saw a lot of that retail activity. So, although crypto made a really, really great push in Q4, is actually mostly institutional. Q1 is now all that FOMO coming in, and you can see whenever FOMO plays its cards or plays its hand, you get to see that Robinhood is the beneficiary of that. So they made a crap ton of money. Net interest revenue. This one's exciting, okay, because credit cards, you're still seeing just that little drip. Now, although the Robinhood credit card isn't even fully functional yet, what this is that they had X1 previously. So the fact that even that is still growing is kind of funny. And who knows? Maybe they have cards out there that are being tested and such that may play a small part, but that being in the millions of dollars just seems weird to me. But aside from that, I mean, your cash sweep's doing great. Everything is looking perfectly fine on the net interest revenue. But coupled with the fact that transactional based revenues are also doing good, is showing the perfect quarter. Someone in the chat said, why is it dumping? It's up 6%. It's up 6%. The stock in after hours. I promise you, people are really happy with these results. This was another one too. Look at this. So this was a real big bear case for me on stock-based compensation. I never liked how much Vlad Tenev got paid to, essentially fund this business. Okay, he took a lot of money, and that's his God-given right. But still, it's my right to not invest in a company. Now, whenever we're seeing stock-based compensation come all the way down in Q4. We saw this massive drop off, but yet it was still 17% of overall revenue. That's just too high for me. Now, they're still cutting that down while making massive runs in revenue, is bringing that amount down to just 10% of overall revenue, stock-based compensation as a percentage of revenue. So crazy. Diluted shares are doing absolutely fine. Nothing to see here. Okay, so no real red flags. They're looking at continuously increasing their amount of operating expenses, but I think the most part of that is really going to be in marketing. They have made massive jumps in their overall business and what they can offer, and now it's time to actually promote it and get people back on the platform. While I talk about that, I wanted to bring up, we can talk about cash here. They had cash here as well. So just in terms of cash, not even including investments, I think they're at 4.7 billion, if I remember correctly, just $100 million less than last quarter. That is actually what I would prefer to see. Whenever you have companies like Robinhood that are growth companies that sit on a ton of cash and don't make big moves, and potentially the stock doesn't move either, it's a waste of having that difference between market cap and enterprise value, okay? I don't really care if they have a ton of cash if they're not using it correctly. The fact that they're actually starting to use some of this money and buying things that could potentially further their business, like marketing expenses to get new people on the platform, or buying X1 to actually further their product line, is what we need to see as investors, or what do you call it? Potential investors. That's what I want to see. Now, let me go to. Now, we talked about gold attach already. Net deposits. Here's another one. Okay. Gold subscriptions. They're seeing massive gains. In fact, it's probably time that I switch over to the press release as well, because I'd like to read what Vlad Tenev said. Because he said some great things about April and stuff like this. But anyway, net deposits is the absolute kingpin here. Like, the fact that more and more people are putting more of their money onto the platform and in their gold subscription, which is going to be much more sticky, is a very great sign. Now, here, let me switch over to some other, let me show you guys my spreadsheet really quickly, just because I know where to look to get some of this information. Okay, looking here, what we can see, average revenue per user, okay? Average revenue per user went from $80 to $81. That alone, I was talking about being a positive, right? Hey, we're making positive increases while also increasing the total funded accounts. Amazing. Going from 81 to 104 is a massive jump. Okay. Unbelievable. Net income went from 30 million to 157 million. Even the margin, look at the margin. Holy crap. Going from 6% last quarter to nearly 27%. On an adjusted EBITDA basis, they hit over 40% margins. So this was a absolutely cracked quarter. They did amazing. Customer acquisition costs went from $390 to $134 per share. That's not unheard of with Robinhood. It's really dependent on how many new customers they have. They kind of have like sort of a flat marketing base. And then depending on how popular trading is, will depend on how many new accounts come onto their platform. So if markets get much worse, something terrible does happen, this can quickly turn around. But you can see how they can have somewhere along the lines of $18 for customer acquisition cost. And in the same breath, the next quarter, they can have 400. So they will be ramping up their sales and marketing, but hopefully, potentially with good markets, that will actually lead them to have much, much better costs for how many people actually come onto the platform. Let's see here. So here you can kind of see quarter over quarter just how different this quarter is versus everything else. So transaction-based revenues, bear with me here. I'll bring it to, I'll show you guys 2 years. So you can see in transaction-based revenues just how different this is comparatively to the last ones. Quarter over quarter, negative 17%, negative 7%, 3%, or even looking on a year over year basis, going all the way to today where you're seeing 64.5% growth quarter over quarter. In options, that's a 27% increase. In crypto, that's a 193% increase. In equities, that's a 56% increase. It's not like one section held them up. It was across the board. There was more activity on Robinhood. Okay, very good. 9% decrease in other revenues, not a big deal. Okay, it was $1 million. This definitely is a massive, massive success on their part. On net interest revenues, okay, margin interest went up 9%. Security lending went up 66%. Credit cards went up 20%. Interest on investments stayed essentially flat, down 1.4%. Interest on cash and deposits went up 7.4%. It was just across the board as successes. Do you understand? Other revenues is flat. What was, or sorry, I don't have that in the thing. What was that? I think it stayed flat, right? Here, bear with me. I'm just on my other screen real quick. I'm going to go find... Where's your revenue? Show me your revenue. Oh, and then we need to talk about the retirement accounts because that is it stayed at 35. There you go. Other revenue stayed flat at 35 million. Okay, so actually that changed the net income margin. I didn't realize that I didn't have that plugged in. There you go, 25.4%. Am I missing anything else that I didn't plug? Employee count increased a little bit, but still very low. Revenue per employee went to 277,000. Holy crap. Incredible. Okay. Let's drop off of this and we will read Vlad Tenev's remarks and then go over into retirement accounts. $24, $25 soon. I mean, hey, if they can do one more quarter with this level of growth or even stay even in single digit growths past this quarter and just say, hey, we're going to keep up this new level of revenue in the 600 million-esque mark and that this wasn't a one-time occurrence, it's over. They get completely re-rated. I think that why the stock isn't absolutely jumping in double-digit percentages is just the fact that people might think that this is a one-time occurrence and that the markets were really hot. But that's the sort of seasonality with a company like Robinhood. That's why Robinhood Gold is so important and retirement accounts are so important, because it really lays a base for how much money will be consistent and reoccurring. Okay. We continued to aggressively execute on our product roadmap in Q1, leading to all-time highs for new deposits and gold subscribers, said Vlad Tenev. Q2 is off to a strong start, with April being the highest month of the year for net deposits and gold subscriber growth. So yeah, they're saying it's going to repeat. And we're excited to see strong interest from over 1 million customers in the Robinhood Gold card. We already knew that, but it's good to hear it again. We delivered strong revenue growth and margin expansion in Q1, and we remain focused on driving another year of profitable growth in 2024. In Q1, we set records for quarterly revenues, net income, and EPS, even as we stepped up our marketing and growth investments. Stunning. Okay, now let's jump away from this because I think we read most of this. Average revenue per user went up 35% to 104. Gold subscribers continued to accelerate, hitting a record new high of 1.7 million in Q1, up 260,000 quarter over quarter, marking the fastest quarterly growth in 3 years. And now they're saying April, Vlad Tenev said that April was their highest month of the year for gold subscriber growth. You catching on to the trend here? So yeah, this is the thing that actually Amit went to, where they discussed having a new 1% unlimited deposit growth or deposit boost, which they will give out to you over the next 24 months. So it kind of implies that you have to keep those investments on Robinhood. But if you find that their platform is not only, or if it's better than potentially Schwab, Thinkorswim, whatever you're using before, and you're already using Robinhood, then hey, accept the extra 1%. If you think that it's also just of similar quality to those services, then hey, it's 1% better in that way in terms of your total overall performance. Let alone whenever you start to cross-sell into the credit cards, into the the retirement, IRA match of 3%, then you're just going to see higher returns using one brokerage over another. And that's really going to matter for investors, considering that's why they're doing this. So as long as Robinhood can remain profitable while giving out these large incentives, then they completely take the cake here. And that's essentially what we're seeing. Whenever you're talking about them having 25% net income margins, they're doing it. They're doing it. Now, let's talk about Robinhood's retirement accounts, as well as the growth in their deposits. So this was something that they talked about last quarter. It's seemingly to be the case that it's furthering, is that the new people that are coming onto the platform do not have $200 in their account. That 3% match on IRA is extremely exciting. And so people are sending over hundreds of thousands, if not millions of dollars over to Robinhood to say, hey, you know what? Give me a welcome bonus of $50,000 for bringing over, a $5 million account. That is insane for someone to even think about. And yet very true that Robinhood will give that bonus. To show that that is the case, look at this here. Average cumulative net deposits tend to grow over time across our funded customer cohorts. And recent cohorts, initial net deposits are larger. So this is back whenever you can kind of see the lighter greens are, where they used to be, where you were getting really, really small accounts on the platform. But these darker colors are getting more and more higher net worth individuals that are coming onto the platform with $4,000, and then on average. So you're going to get people that have a couple hundred. You're going to get a couple people with a couple million. But then even as they start to join, they say, hey, you know what? This platform's fast. It's intuitive. I'm trusting it more because the things that are happening, it's saying I'm making money, I'm making withdrawals, it's working. And so they continue to pour in more and more money. And this is just leading to that, snowball effect of them getting better and better customer results. And so if they can turn around with a customer that just joined on, giving them $4,000, then working their way up to $6,000 over the course of just a couple months, they're going to take that money and work it into sales and marketing, right? Once they do that, hopefully they get more and more customers, learn a way to get them even higher net worths, and continue to pick away at that mountain that is Charles Schwab. And right now, this is what everyone wants to talk about. Robinhood has such a long way to go before they can start getting, into the really big deposit numbers, like way above, 11, what was it, 11.4 billion or whatever, getting into like the 112 billion. That is whenever, or 120 billion, that's whenever Charles Schwab is really going to start to care, right? Because they're still such small fish. But it's the rate at which they're picking away where you can kind of see some real innovation here, and that people are obviously loving the platform. Let's see here. Okay. Well, I was going to show retirement accounts. Where is that? They have a slide for the retirement accounts. Robinhood Gold. Okay, so we'll do this one first and then Robinhood Gold. So these are the overall retirement accounts. And so this started in Q1. So the quarter you see here was the first one. There wasn't one before it. So it's been around for 5 quarters. And we went from 220,000 accounts to 650,000. And then in terms of the billions of dollars, which they're already holding, which, by the way, at the end of April, Vlad Tenev has already said they've already hit 6 billion here. So this shouldn't even be 4.2. I wonder if they have a mark, because it was public information. Here, I'll go to X right now and I'll find Vlad Tenev's remark about this, because he did just talk about this. Yeah, on April 25th. So he said, update from less than 1 month later, Robinhood Retirement now hits 6 billion in assets under custody. Could not wait for a designer to update it, so I took things into my own hands. So forget 4.2 million or 4.2 billion. We're already at 6 billion near the end of April. Unbelievable. Unbelievable. So let's go back. Just consider that whenever looking at this chart. Retirement assets under custody per account. This isn't just growth on a user basis. It's also growth within those users. And now you could say this is a lot of people that are trusting the platform and are actually, moving more and more money. But I actually just think it's the overall size of the accounts are getting larger and larger because they're trusting that 3% bonus. Any guidance given? No, not really. Robinhood does not really give guidance that's, all that worth looking at. Robinhood Gold in Q1 2024 subscriber growth was the highest in 3 years. So these are the benefits that you're going to end up receiving. Does this even include okay, yeah, it does. Gold card, 3% cash back across the board, 1% match on deposits, 3% in IRA, better margin rates, enhanced market data, professional research. I think they have a thing with Morningstar. $2.25 million in FDIC insurance. It's just the way to go if you want to give them $5 a month, or I've seen it as high as $10 a month is what they're charging some customers. If you actually go onto the Robinhood Gold card and you go to their standard terms and services, you can actually see that I think it's placed at Robinhood Gold subscription price is $7. Anyway. Yeah, so unbelievable. They're seeing just massive growths between the differences of gold subscribers versus regular subscribers. And so the higher that they can get this attach rate up while also growing new users is just a snowball that you're not going to want to be, essentially not a part of, or at least the way that I look at it. So very, very exciting. Unbelievable. Okay, we have the earnings call coming up. I'm going to make sure that I have my ears peeled. Okay. Right now it's just music, so I'm going to just keep that in the background now. And then the second I start hearing some actual voices, we'll flip on over. If you guys want to take a look at some of the things that I have also shown off here, we can take a look at this as well. This is very exciting. Total revenues. Wait, so is this actually a record-breaking level of net revenue? Let me see here. Um, where am I looking? Do I have total revenue here, or is it at the bottom? Total revenue. So we hit 618 million here. Going all the way back, yeah, we never even hit 618 million. This was a record-breaking revenue quarter, even in the height of old 2021. Incredible. But you can see, look here on transaction revenue, not quite as high. But once you actually start increase or including net interest revenue, there was really no leaning on net interest revenue back in the day. So this is absolutely amazing comparatively, right? And it also leads to them being a much more diversified business. That's incredible. Stock-based compensation. This massive bar actually shouldn't be looked at uh, too seriously. This was them actually writing off their founder package or whatever. So, but yeah, 10%. That is a reasonable number. In the 20 percentages and stuff like this, 17%. That's not really reasonable in this market. So you can kind of lose your premium that way. Revenue per employee. Well, employees are staying much, much lower than even they were back whenever we were getting revenue this high. I mean, that's freaking exciting. Highest assets under custody. Man, this is freaking exciting. Monthly active users starting to see a real turnaround, right? So back before, this line of monthly active users continuously decreasing was kind of a bummer because I didn't care about total funded accounts whenever monthly active users were so low. The sort of hit back from other investors was the fact that more and more percentage of the overall user base is retirement accounts. So are they supposed to be checking up every single day or every month? They don't need to. No, they're kind of it's set it and forget it type of investing. So the fact that this is the highest percentage of total revenue, or sorry, total retirement users, while also increasing dramatically monthly active users just month over month. It's almost a 30% increase. Uh, that's exactly what Robinhood investors want to see. Highest margin on net incomes. They did well. Now, total cash and cash equivalents also, that's the like as weird as it sounds. Obviously, more cash sounds like the best thing to actually have, but in Robinhood's sort of like where they are today, it's not actually what I want to see. I want to know that they're putting some of that money to work while they're in still a growth phase in their business because they've had such a large percentage of cash. Oh, I think the earnings call is coming on. Let me switch on over. Oh no, never mind. The music was just looping. But it should literally be any second now. So the second I hear the music cut off again, we're just going to switch on over. Let's do some more reading here, though. Additional Q1, right. Additional Q1 operating data. Cash sweep increased 113% year over year to 19 billion. Margin book increased 32%. I can't wait to start breaking down what their credit card numbers are going to look like. Uh, you know, being a little bit more on the banking side because of SoFi, I think is going to give us some advantage to sort of read how great their credit card is in terms of, oh, we're switching over. Let's listen in, ladies and gentlemen. Okay, bear with me.
Are in listen
It's about to get
only mode.
loud.
After the speaker's presentation, there will be a question and answer session. To ask the question during this session, you will need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. We ask that you limit yourself to one question. To withdraw your question, please press star 11 again. I would now like to turn the call over to Chris Cagle, VP of Corporate FP&A and Investor Relations. You may begin.
Thank you, Tawanda, and thank you everyone for joining Robinhood's Q1 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO Jason Warnick. Before getting started, I want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP results we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks, Chris. Hi, everyone. I, again, will keep my remarks short so that we can have plenty of time for questions. So just to remind everyone, Robinhood is focused on three things. Number one, winning the active trader market. Number two, increasing wallet share with our customers. And number three, expanding internationally. We believe the strategy is working and it led to strong business outcomes in Q1. First, retail trading market share. It can continue to increase in Q1, and it was really bolstered by our product innovation. As a result, year-over-year notional trading volumes were up significantly across equities, options, and crypto. Net deposits, they were a record $11.2 billion with strong diversity across brokerage, cash sweep, and retirement. This translates to a 44% annualized organic growth rate and continues our multi-year track record of delivering 20% plus net deposit growth. And customers are also moving their assets to Robinhood in record numbers. Q1 was the second quarter in a row we had net asset inflows from every other major brokerage, totaling nearly $3 billion, more than twice our Q4 level. I also wanted to highlight Gold subscribers. Customers are finding our Gold offerings compelling across high-yield cash, retirement, margin rates, and now our Gold credit card. This led Gold subscribers to reach 1.7 million in Q1, higher than at any other point in our history. The 260,000 Gold subscribers we added in Q1 was the fastest in the past 3 years. It's also exciting to see that nearly 20% of new funded customers in Q1 subscribe to Gold, and that's more than double a year ago. Putting this all together with continued expense discipline led to record revenues of 40% year over year and record GAAP EPS of positive 18 cents. Now, what's even more exciting is that we continue to deliver amazing value to customers. And before I share more about what we're doing for our Gold customers, let's have Jason review our financial results.
Thanks, Vlad. It's good to speak with everyone today. As a reminder, last year we drove significant profitable growth with revenue up 37% and adjusted EBITDA margins expanding by 36 points. In 2024, we're focused on driving another year of profitable growth, and we had a strong Q1 with 40% year-over-year revenue growth and 14 points of margin expansion from a year ago. We also set records in Q1 for quarterly revenues, adjusted EBITDA margin, net income, and GAAP EPS. Looking more closely at our Q1 results compared to a year ago, total net revenues grew 40% to $618 million. Adjusted EBITDA more than doubled to $247 million. Incremental margins were 75%, demonstrating the scalability of our cost structure, even while we increased marketing and growth investments. And adjusted EBITDA margins expanded by 14 points to 40% as we make progress over time towards the 50% plus levels we see from incumbents. All of this led to net income of $157 million, or 18 cents of EPS. We're pleased with our results in Q1, and we aim to continue delivering profitable growth in 2024. Now let's move to our first quarter business results. Assets under custody finished Q1 at a record $130 billion, up 65% year over year. A key driver of that asset growth was strong Q1 net deposits of over $11 billion, which is more than double last year's quarterly average and translates to a 44% annualized growth rate. We're encouraged by the breadth and durability of Q1 net deposits, so let me share a little more color. First, we saw strong participation from both existing and new customers, with about 75% of net deposits coming from customers who've been at Robinhood for over a year. Second, we saw a nice mix of continued strong contributions from customers and wins versus brokerage incumbents. The mix was about 75% contributions from customers and 25% net wins from incumbents. And third, deposits into our platform were balanced across product categories. A little more than half of Q1 net deposits went to brokerage, another quarter went to cash sweep, and the last 20% to retirement. So overall, we're really pleased with the diversity of net deposits as customers engage with us across our platform. Looking at Q2, so far it's off to a good start as well, as April was our highest month of the year for net deposits, with nearly $5 billion. And with our continued progress in early May, we've already brought in more net deposits year to date than the $17 billion we did in all of 2023, with most of the year still in front of us. We're also delivering growth in Robinhood Gold. As a reminder of how Gold subscribers on average compare to our customers overall, in Q1, Gold subscribers had 8 times the average, with an average of over $40,000, grew net deposits roughly twice as fast, and had 5 times the retirement account adoption. Gold ARPU is also multiples of our average customer, which includes annualized recurring subscription revenue approaching $100 million. And in Q1, we grew Gold subscribers to 1.7 million, up 42% or 500,000 from last year. This momentum has continued into Q2 as we added another 140,000 Gold subscribers in April, more than half of our Q1 growth. Let's now turn to our financial results. In the first quarter, we generated net income of $157 million, up 5x sequentially, as we grew revenues and stayed disciplined on expenses. Looking at Q1 revenues, transaction-based revenues increased sequentially across equities, options, and crypto, and net interest revenues grew as a result of higher balances and securities lending activity. So far in Q2, we've continued to see robust trading. In April, equity notional volumes were about $70 billion. Options contracts were a monthly record of roughly $125 million, and crypto notional volumes were around $10 billion. Now let's turn to first quarter expenses. Combined adjusted OpEx and SBC was $460 million in Q1, as we stayed disciplined on expenses, even as we increased investments in marketing and growth. Looking ahead, while the year is off to a strong start, we know it's important to stay disciplined on expenses. So our full year adjusted OpEx and SBC outlook is unchanged, in the range of $1.85 to $1.95 billion. Before I pass the call back to Vlad, I want to share some perspectives about our opportunity to drive profitable growth in 2024 and the years to come by growing revenues and expanding margins. First, we believe we can continue our multi-year track record of delivering 20% plus net deposit growth rates, supported by a young customer base gaining share of global wealth share gains in existing markets, and expansion into new markets and product categories that give us more opportunity for growth. Second, as customer assets grow over time, we believe this will drive strong revenue growth as well. We're naturally hedged between interest rates and trading, and we continue to diversify our business as we introduce new products and enter new markets. And third, we're a technology company and a highly scalable platform with about 90% fixed costs. So as our revenues increase, we believe we can drive significant margin expansion and free cash flow. In closing, we had a strong Q1, and we have a lot of momentum to start the second quarter. We remain focused on driving profitable growth for shareholders as we work to maximize EPS and free cash flow per share in 2024 and the years to come. Now I'll turn the call back to Vlad.
Thanks, Jason. As I said earlier, the second part of our strategy is increasing wallet share with customers, including growing Robinhood Gold subscriptions, which hit an all-time high of 1.7 million in Q1. In March, we held Robinhood's first ever keynote event to introduce even more value that we're providing Gold customers, including an all-new customizable app experience, a 1% unlimited deposit boost for Gold customers that's launching soon, and a brand new Robinhood Gold credit card with 3% back on all purchases. We're seeing lots of commentary about how amazing of a deal Gold is, and we're happy customers are recognizing that and starting to spread the word. Over 1 million people have signed up for the Gold card waitlist, only half of which are Gold subscribers today. So we believe we can substantially grow Gold adoption as we roll out the card. We love seeing the progress we're making, attracting, retaining, and expanding Gold customer relationships on the journey to be the most trusted, lowest cost, and most culturally relevant money app worldwide. I want to thank our customers for continuing to trust and advocate for the platform as we make progress on our mission to democratize finance for all. The business is in a great position because of you, and we're just getting started. And you should know our team has been working incredibly hard to deliver even more value to you. The roadmap is full. There's so much to do. And now let's move on to questions.
All right. Thank you, Vlad. For the Q&A session, we'll start by answering the top few shareholder questions from Say Technologies, ranked by number of votes. We passed over questions that we had already addressed on this call or in prior quarters and grouped together questions that shared a common theme. After the Say questions, we'll turn to live questions from our analysts. So we'll kick it off with our first question from Say. Alexander M. asks, what impact will the SEC Wells notice have on the business? Jason, do you want to start on that one?
Yeah, I'll maybe start and then Vlad can add some thoughts. First, for our customers, your accounts are not affected by this. It's business as usual for Robinhood Crypto. We're, of course, disappointed to have received the notice. As you know, we've operated our crypto business in good faith. We've been very conservative in our approach in terms of coins listed and services offered. And we're a highly regulated company and have applied the same legal and compliance standards we use for our brokerage to the way we run our crypto business. So it's disappointing to see more regulation by enforcement here. Vlad?
Yeah, I mean, echoing Jason, this is a disappointing development. We firmly believe U.S. consumers should have access to this asset class. They deserve to be on equal footing with people all over the world. And at the end of the day, we're going to defend the firm and continue to advocate for our customers.
Right. Thank you. The next question is from Joseph C., who asks, when are the new credit cards getting fully released? Seems that many are still on the waiting list. Vlad, do you want to start that one?
Yeah, I'll take that one. Thanks for the question. First of all, we're really excited about the Gold card and the value that we're going to be providing to customers. We've seen a ton of demand. I mentioned earlier, over 1 million customers have signed up for the wait list so far. And the product's looking great. You might have noticed we've dropped the credit card app on the App Store, and we've rolled it out to the first customers outside of the company. As we think about this rollout, we really want to balance the desire to get the card to customers as quickly as we can with making sure that we're managing risk to the capital well as we enter a new market for us. So we're starting with an initial group in the tens of thousands of customers over the next few weeks. And then we're going to observe them carefully, look at the data, watch the spending activity and the borrowing activity, and we're going to use that information to inform the broader rollout of the card. We really want to make sure that we're being very, very prudent as we do this rollout, since this is a new business line for the company.
Great. Thank you, Vlad. And then the third question from Say is from Daniel R., who asks, 24-hour market was halted. How can we trust that the platform, when markets become volatile, what steps are being implemented to handle future volatility?
Well, first, it's really been awesome to see how much interest there is in our 24-hour market offering. Over 10 billion in volumes have transacted in the overnight section since it launched a year ago. And we now offer overnight trading in over 900 names. And really, this is one of the core differentiators of Robinhood. You don't find this type of offering elsewhere easily. As for why trading was affected, so in order to facilitate these trades, we route to a third-party ATS. The ATS we use went down for the evening. This affected us, but also other firms that route to it. But the ATS was able to support trading again in a handful of hours. Looking ahead, we're really on the frontier with this offering. But as we continue to invest in it, the offering will improve over time and it'll get more resilient. So believe us when we say that we're committed to making sure this offering is reliable and more feature-rich going forward.
All right. Thank you, Vlad. That concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking the time to ask these questions of Vlad and Jason and look forward to more next quarter. Now I'll turn the call over to Tawanda to lead Q&A from our analysts.
Thank you. Ladies and gentlemen, as a reminder to ask the question, please press star 11 on your telephone and then wait to hear your name announced. Limit yourself to one question, and then you may jump back into the queue. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster. Our first question comes from the line of Devin Ryan with Citizens JMP. Your line is open.
Hey, thanks so much. Hi, Vlad. Hi, Jason. How are you?
Hey, Devin.
I want to ask a question on the growth in new deposits. I mean, just really impressive momentum there, and good to hear the second quarter is accelerating further. And it feels like you're just scratching the surface on Gold adoption, I think, Vlad, as you talked about. And I also think the offering really stands out in the market. So, with that said, I heard Jason's comments on better ARPU for Gold customers, but is it possible to kind of simplistically unpack the economics you're expecting on new deposits coming in to a Gold connected account under these new promotions relative to deposits that aren't, or even kind of like revenue per asset under kind of the model prior to these promotions? I'm just trying to think about the economics on the net of dollars coming in, because it seems like you're seeing a really nice acceleration there. Thank you.
Yeah, thanks, Devin. It's Jason. I'll go ahead and take that. So in short, we love the economics of the match promotions that we've been running. I think I said last quarter that the payback on the 1% match is a little under a year, and on the 3% match, it's between 2 and 3 years. And we're watching that closely, kind of on a monthly cohort basis with our customers. We're seeing the 2023 cohorts already paying off, and 2024 is off to a great start. We mentioned on our prepared remarks too that the strength of net deposits, 44% annualized growth rate, is really well diversified between customers that have been at the company or been at Robinhood for over a year, representing 75% of those net deposits. And we're also seeing that 75%, cut a different way, are unrelated to the promotion. So really strong promotion response, but it's only a small part of the strength of the overall deposits for the quarter.
Thank you. Please stand by for our next question. Our next question comes from the line of Dan Dolev with Mizuho. Your line is open.
Hey guys, thank you for taking my question. Great results out there. Really, really nice.
Thanks, Dan.
Of course. Yeah, so you mentioned some really strong numbers in April, really strong momentum. Can you maybe elaborate a little more regarding the momentum that you're seeing heading into the second quarter? Any color and additional views on the momentum would be greatly appreciated. Thank you.
Yeah, absolutely, Dan. I mean, so we're seeing, strong trading across equities, options, and crypto, continuing into the next quarter. We're seeing strength kind of across the business as well in terms of new gold subscribers. We mentioned, and you mentioned, the strength in net deposits, nearly $5 billion. So, we're really seeing great diversity of the strength. Retirement assets are now crossing over $7 billion, which is just remarkable growth, and we love to see, our customers saving for the long term with us. We're going to share our metrics, I think, next week on the month of April, and so you'll get a fuller picture there. But it's really across the board, whether it's sec lending or trading or net deposits.
Yeah, and I would just add, we're of course excited about the Q1 performance and the start to Q2. But I think we have some medium and longer term tailwinds to the business. The gold benefits that we announced in March, including the 1% deposit match, which really has resonated quite strongly with customers based on early feedback, has yet to launch. We're entering a new product category with the credit card. And we've also been working on our futures and Web Pro product for active traders. And, we here get an early look at the products that we're building, and the teams have been working incredibly hard to make what we believe are incredibly polished products that we're very excited about. So I think we tend to get excited about things on a quarterly basis, but we're running this business for the long term, and I think that you'll see a lot more from us.
Thank you. Please stand by for our next question. Our next question comes from the line of Steven Chubak with Wolfe Research. Your line is open.
Hi, good afternoon, Vlad. Good afternoon, Jason.
Hello. Hey, Steven.
Yeah, so I wanted to start off with a question just on the incremental margin ex SBC coming in at 75%. Certainly a good outcome. As we think about the incremental profitability as the business scales, is that 75% bogey a reasonable expectation for investors to underwrite? And just trying to gauge whether there's room for even further operating leverage or upside, given the marketing spend was actually relatively elevated in the quarter as well.
Yeah, thanks for the question. So we're not providing guidance necessarily on incremental margins. What I tell you is, as I've said in previous sessions, that about 90% of our cost structure is fixed, meaning that 10% of our costs kind of are variable relative to the activity of our platform. So that gives us a lot of opportunity to drop incremental revenue to the bottom line. You're seeing us this year make a really big step up in marketing. About $100 million year over year is our plan to spend in marketing versus last year. And as Vlad was touching on in the last question, we're making a lot of investments and not sitting still. And even with all this step up in marketing and investments for growth, we're delivering incremental margins at 75%. So we feel really good about that. We're going to continue to watch our costs. Excited to see revenue per employee cross over 1 million. I think that there's a lot of opportunity to expand margins going forward.
Thank you. Please stand by for our next question. Our next question comes from the line of Kyle Voigt with KBW. Your line is open.
Hi, good evening. Thanks for taking my question. Maybe just a question on the Gold Card. Obviously, the offering is very compelling and great to see the demand with the waitlist at over 1 million users already. But just wondering if you could expand upon the expected economics a bit. You've noted the $300 ARPU previously, but that was for X1 with a relatively small subset of users that you ultimately ramped to with this offering. And just given how attractive the card might be for some more, transactor types, and those don't carry a balance, are you still confident in your ability to profitably monetize a broad range of potential new clients? And then if I just add a second part of that question, can you give us any flavor on what you might expect on the transaction revenue side for the offering specifically? I'm assuming maybe some level of headwind after netting out interchange and rewards, but wondering if you can kind of frame that. Thank you.
Yeah, you bet. Thanks, Kyle, for the questions. Jason, I'll go ahead and take that. The first point I'd make on the credit card is that we think it's really strategically aligned with, our vision that we want to serve all of our customers' assets and process all of their financial transactions. And having a great value credit card, I think, is really fundamental to that vision. That said, we need to do this in a prudent way and in a way that makes sense economically for the company. And on that point, I think that we've got a few things that are going to benefit us. First of all, we're going to be able to leverage our scale. We're seeing that already play out with a low CAC. We have over 1 million customers on the wait list with essentially no marketing dollars against that. And when you look at competitors, they're spending several $100s, perhaps $500 per customer to acquire a customer. And so we really love the low CAC opportunity that leverages our platform. We're also able, versus X1, to get even better economics. And for example, cost of funds, we've already been able to improve by over 300 basis points because of our strong balance sheet and because of our strength in the financial results. And so those are a couple of areas that I'd point out. And then thirdly, I'd say that we have an opportunity to benefit because of our deeper relationship with customers. It's going to help us understand better the customers that we are underwriting and make better decisions. And over time, have an opportunity to offer collateralized cards, which would also help with our economics. As Vlad, I just finished with, as Vlad pointed out, we're going to be really careful and prudent here. We're rolling it out to tens of thousands of customers, and we're going to take months to look at how our customers are responding, how they're using the card, their borrowing and repayment activity, and we're going to use that to inform our broader rollout. And the last point I would make is 2/3 of our customers are prime or higher in terms of credit rating, and so we do have a high quality customer base. And so together with the prudent rollout and the high quality customers and benefiting from our scale and our deeper relationships with customers, we think we can land a good economic outcome for Robinhood.
Thank you. Please stand by for our next question. Our next question comes from the line of Mike Cyprys with Morgan Stanley. Your line is open.
Hey, good evening. Thanks for taking the question. Just wanted to ask about capital allocation. Hoping you could update us just around your latest thoughts there with $5 billion of balance sheet cash and investments. Just curious how you're thinking about the appetite for dividends, buybacks, M&A, where M&A could be most additive at this point, given you just added on the card platform side. And then just on M&A, maybe just remind us of your hurdle rates and criteria there. Thank you.
Yeah, thanks, Mike. We love the strong balance sheet, over $5 billion of corporate cash. 3 ways to use the capital to the benefit of shareholders. One is just, investing in our business for organic growth, and you're seeing us do that with their incremental investments for growth, including the $100 million step up in marketing this year. The second is M&A. You've seen us recently acquire X1. We have a very active corp dev team, and we're looking at several opportunities there that can either augment our team, the talent of our team, or accelerate our product roadmap. And nothing to announce, but the team is certainly active. And then the last category is returning capital to shareholders. You saw us do that last year in the third quarter, about $600 million to purchase 5% of our outstanding shares. And so, we're deploying capital kind of across all three. In terms of, hurdle rates, you'd expect us to use our cost of capital at least, and we're mindful of that. And nothing further to update you now on capital allocation. It's something that we're kind of constantly looking at.
Thank you. Please stand by for our next question. Our next question comes from the line of John Todaro with Needham & Company. Your line is open.
Hey, great. Thanks for taking my question. And yeah, great results here. I guess we're just trying to understand of course, the crypto side of the business post the Wells notice, and just kind of get a little bit more color on where you're thinking at. And I guess in particular, if you look at it and you go, hey, we're kind of almost being treated the same way as Coinbase, does it start to make sense where you look at more broader listings because you guys have been fairly conservative on that front, or is that not really a fair way to think about it?
Yeah, I think you're right in that we've been extremely selective about the assets that we offer on the platform. I mentioned in the prepared remarks that we have seen increases in volumes and in market share on the crypto side. I think for a long time, we were offering customers great pricing on purchasing crypto assets, but we weren't doing a great job of communicating it. And now we are communicating it through the user interface and through all sorts of marketing surfaces. And I think customers are starting to pick up on that fact. You're seeing it talked about more in social media, just how great of a deal they're getting on crypto transactions. And we're expanding in the EU, where we, again, believe that we can provide great service and great offerings to customers. So the crypto team's been working tremendously hard. The roadmap there is quite full. There's a lot to do to make the product experience better for customers.
And I would just add that, we've been incredibly selective in the coins that we've listed, and are confident that the coin selection does not include any that are securities. And we continue to apply that high standard on anything that we would list on our platform.
Thank you. Please stand by for our next question. Our next question comes from the line of Brian Bedell with Deutsche Bank. Your line is open.
Oh, great. Thanks. Good evening. Maybe just staying on the crypto theme, maybe Vlad and Jason, if you can talk about just the nature of the surge in crypto volumes in March. And I think you said April was at 10 billion. Appreciate, of course, this is very volatile class, but maybe if you can just talk about what you're seeing, that drove that heavy activity in March, and whether you think we could see spikes like that again, and then just the mix of crypto volumes between the EU and US is maybe the EU is still very small, but just trying to get a sense of that.
Yeah, I mean, in terms of what drives crypto volumes, I think modulo our market share gains, our crypto activity does track the broader market, and I don't really want to get into prognosticating what the crypto market is going to do. That's obviously a difficult thing for anyone to do. It's a global market. There have been ETFs approved, as you all know. And that's why we look at market share and how we're doing relative to peers, because markets go up and down. But if our market share is growing throughout all conditions, then over the long run, we'll do very, very well on that side of the business. And that's kind of our approach across all of the asset classes for the active trader business. But the goal is also to diversify the business so that we're sort of like less reliant on volumes anywhere in any one category to drive business results. I think that's kind of what you're starting to see in this quarter's results is really the performance of the company across all asset classes and even across wallet share with the net deposit growth numbers.
In terms of the mix element of your question on Europe, you're right. It's still a relatively modest contribution. The lion's share came from our U.S. crypto business, but we like what we're seeing and tens of thousands of customers there. So we'll continue investing there.
Thank you. Please stand by for our next question. Our next question comes from the line of Patrick Moley with Piper Sandler. Your line is open.
Yes, good evening. Thanks for taking the question. So I just had one on index options. I see it's referenced in the deck, but I didn't hear it mentioned in the prepared remarks. So are you still planning to roll out index options later this year? And then just on the economics, it's my understanding that index options are much less profitable for the brokers than multi-listed options are. So just curious if, what your expectations are around how much of your current options trading could be cannibalized by index options. And if you do, or when you do roll it out, have you given any thought to potentially charging a commission on index options? Thanks.
Yeah. So we have announced that we're going to be launching index options. This is part of the overall goal of giving our active traders access to the best tools and the best value for their services. So index options are coming in Q4. We'll also be launching futures, as we've mentioned in the past. And as with any new Robinhood product, there's two areas where we'd like to stand out in the broader marketplace. One is the user experience. We want to make sure that our tools are easy for active traders to use, particularly on mobile, but also on web with the new offering that's coming there. And then economics. So, the economics we intend to make very, very competitive, but also profitable for the company on a segment basis. So, Jason, I don't know if you want to add anything more specific there.
Yeah, we're still working with the team on the pricing structure for index options, so we'll have to stay tuned there. But agree with Vlad that we want it to be a great value for customers and also make a lot of sense for us economically.
And we should note, index options trade round the clock, which is one of the reasons why they become so popular. So we don't anticipate seeing a ton of cannibalization there.
Thank you. Please stand by for our next question. Our next question comes from the line of Matthew O'Neill with FT Partners. Your line is open.
Yes, hi guys. Thanks so much for taking my question. A lot of good ones asked and answered already. I was wondering though, since we are seeing such a clear inflection point in the MAUs, and you gave some incremental details around the growth there from the card, both gold and non-gold, sounds like 500,000 each. Could you help parse maybe the rest of the monthly active user growth, even just anecdotally, like more crypto focused or more options and equity focused? Thanks.
Yeah, absolutely. There is an impact to MAUs when crypto interest surges, and we saw that in the quarter, and so that's certainly a part of it. But when I look at the activity across the quarter, it was very broad-based. Equities, up, options activity up, certainly crypto, retirement, gold members, net deposits, and so we really saw an overall lift that was reflected in the engagement numbers that you're seeing.
Great, thank you.
Thank you. Please stand by for our next question. Our next question comes from the line of Ken Worthington with JP Morgan. Your line is open.
Hi, good afternoon. Thanks for taking the question. When we look at your promotions,
Hey, Ken.
Hi. When we look at your promotions, they seem focused on gathering additional customer assets. Do you think such asset-focused promotions could endure over the intermediate term or even longer term as a business strategy? Any reasons why the competition might not either be able to or just might not follow you with promotions of their own? And as we think about, other behaviors you want to target, are there others that promotions might make sense for you to target at some point in the future?
Yeah, I can start with that. I think the first thing I should note is we've invested in building a strong data science and product analytics capability from inception in the company, and I think that's starting to become a key differentiator now that AI is becoming more and more important, and now that we've started running these promotions. We look at it very closely. We can track them all sorts of ways across cohorts and different types of customer behavior. And we like what we're seeing. I think Jason mentioned earlier in the call that for the 1% matches, we've been targeting a sub 1 year payback, and that's between 2 and 3 years for the 3% promotions. And the cohorts from 2023 have already paid back, with 2024 looking good as well. So we feel really good about the offering, and you should see more creativity from the team going forward. I don't think that we've fully excavated what we can do with this capability that we've built.
Yeah, Ken, we love that we're taking share. We love that we're winning assets against the incumbents. And in terms of your question about how durable it is in the medium to longer term, I don't see any reason with our highly scalable platform that we can't continue to offer promotions like that, especially with the attractive paybacks that we're realizing. On your question about whether it's something that could be copied by competitors, I think we could all come up with a handful of reasons why it would be challenging for them, whether it's their cost structure or just their installed base, and defending that through a promotion like that. But we love the promotions here at Robinhood, and again, we like that we're taking share.
Thank you. Please stand by for our next question. Our next question comes from the line of Benjamin Budish with Barclays. Your line is open.
Hi, good evening, and thanks for taking the question. Just on the topic of competition, you highlighted that 25% of net transfers came from other brokerages. Can you just talk about this customer cohort? How do they compare to your pre-existing customer base? Are they coming? Are you seeing any behaviors? Are they coming for the high savings rate? Are they coming for the deposit bonus? Are they active traders? Are they engaging in crypto? Any kind of characteristics of this cohort? Are they similar, different from sort of the existing customer base? Thank you.
They're probably more similar than different. One of the things that I'd highlight is they're coming in with average balances that are much higher than our typical historical customer. So loving the quality of the assets being brought and the activity of the customers, and it's really reflected too in the comments that we're making about payback periods on these promotions, that we are seeing customers engage with our products in a way that generates revenue for us.
Thank you. I'm showing no further questions in the queue. I would now like to turn the call back over to Vlad for closing remarks.
Thank you guys for all the questions. And look, we love the quarter. We love where the business is heading. I think that long term, we're really positioning Robinhood to be a generational company that will benefit from a generational wealth transfer that is only starting now, from older generations to Gen X and millennials. And the goal over the long run is for all of our customers, all of their assets should be custodied at Robinhood, and all of their financial transactions should go through Robinhood. And I think you're starting to see us make significant progress towards that. So thank you for being with us on the call and on the journey.
All right. That was a great earnings call. That was a great earnings. Extremely bullish. The stock actually started to come down on some of the things that they said, but I didn't even I don't know who's listening to a different earnings call than me. That was very, very great. Very excited. But I'm going to talk more about some of my, real opinions about, there were some things talking about there about index options that I was learning about, how the actual monetization of those is actually much lower than the normal options, but talking about how they are more, or sorry, they're available at all times rather than just during the regular hours. So that's something that I'm going to look into and realize, because same thing with Coinbase. If there's new products that come out that can be very cannibalistic to their general business, you have to take those things very seriously. And so I'm going to look into that. But yeah, overall, unbelievable quarter. Can they keep it up? Well, so far, April is looking like it is showing that it has what Robinhood needs to continue to see quarter over quarter growth into Q2. Ladies and gentlemen, if you're new to the channel, I have a show every single weekday at 8:30 p.m. Eastern Standard Time called the FinTech Frenzy, where we talk about stocks just like Robinhood. Okay, that's going to be a big topic of discussion tonight. But until then, I'm going to get ready, have a little dinner, look through some of the other earnings calls. Yeah, thank you all so much for watching. Really do appreciate your time. But until next time, bye for now.